This short documentary attempts to identify the potential problems brewing within Huishan and what could have been done to prevent it. Huishan Dairy is based in Liaoning province, and the province had a bad reputation. Liaoning is known as the breeding bed for defaults, as across history, the local government has frequently adopted plans to intervene and save large companies from defaults. It can be suggested that the environment the company was in created incentives for fraud. Yang Kai chairs Huishan Dairy Holdings. Apart from being chairman, he was also delegated as CEO to manage the operation and development of the company. Chairman Yang is the sole controlling shareholder, holding 71% of the firm's total share. This created an autonomy within the system, as a large amount of power is concentrated within him. The executive management is therefore largely responsible for his wealth and will act in his best interests. This puts the interests of the minority shareholders and creditors at risk without much intervention from the board. To make matters worse, the financial and business risks within the firm were poorly managed. Short-term debt got to 11.1 billion renminbi, which occupied roughly 70% of the firm's total debts, and the gearing ratio reached a record high of 1.25. The company simply did not have sufficient cash flow to repay its debts. Poor analysis and risk management placed incredible pressure on Huishan's cash flow, and they collapsed. Just as things could not get worse, Huishan's top finance executive, Ge Kun, shockingly disappeared after the collapse of the firm. Huishan announced that 2.4 billion renminbi went missing with her. Although there is no evidence of it, it is highly likely that she is suspected to be involved in asset misappropriation. These are the reasons why Huishan Dairy experienced a meteoric fall. For our remedies, both external and internal remedies can be implemented. We identified that the external factors that led to Huishan's downfall revolved around the unhealthy social environment, supervision deficiency, and the bank's negligence. Considering Huishan Dairy's operating environment, the central government could have taken more responsibility to establish regulations after the consistent fraud cases in Liaoning region. The local government needs to be fully aware of the serious consequences of developing a breeding bed and implement stricter regulations on local firms. Secondly, the Securities and Futures Commission of Hong Kong could have regulated the stock market better. The SFC has the statutory powers of investigation and enforcement in cases involving corporate misconduct. The fact that Huishan Dairy gave manipulated and fragmentary disclosure documents should have been better detected, considering their margins were much higher than its rivals. Thirdly, banks need to enhance their pre-loan investigation and post-loan supervision to improve the transparency of debts. Banks should do more background research and evaluate the ability of the firm to repay with stricter control. Post-loan supervision has been a weakness of Chinese banks, and this presents an opportunity for fraud. Banks should establish stronger ethics within its organizational structure. To improve the internal structure of firm, better risk architecture within the corporation, increased frequency of internal reporting, and an annual managerial reshuffle could be proposed. A big problem with Huishan Dairy identified was that a lot of power congregated with Chairman Yang. Clearly defined risk architecture within the organization should be established with the aims of diffusing decision-making from the board of directors. Secondly, increased internal reporting would help improve transparency within the company. This should increase the organization's capability to create better risk measures. A credit benchmark could have been established to improve the gearing ratio and improve cash flow for the firm. Lastly, a reshuffle exercise could protect the company from fraud. The process of reappointing and rotating managers could benefit the company by providing fresh perspectives and improved knowledge between different functions. While the transition period of new managers is a clear disadvantage, we believe it is a necessary strategy to diffuse power and improve transparency internally.